Oil long-term technical analysis for the week of October 31st. Looking at the previous five sessions, we actually gained almost 6% in this, or roughly 6% in this light sweet crude market. So, needless to say, pretty big week. Friday saw a little bit of cooling down, to be expected after that type of move. And we do see currently that 95 does hold the key to the $100 a barrel mark. These are areas that the market's frequented several times, so certainly nobody's afraid of them per se. They don't hold the psychological meaning that they once did in this market. We need to see a break above 95, and we think $100 would be the next move. Whether or not it has legs past that, we're not sure, but currently we do not sell the light sweet crude market regardless. The price action has just been far too strong recently to even consider that. Looking at the Brent markets, it's a little bit different story in this. As you can see, we've really struggled right around the 112.50 area. And upon further review, we notice that we are in a bit of a downward channel. And this downward channel, we are at the top of it at 112. So 112 seems to hold the key. And on top of that, 112.50, I should say, on top of that, the one thing that we would be concerned about is that the next major area that it could run to is 120 if it does break out. But we see a lot of noise in this area, so quite frankly, we're looking for a sell opportunity on some type of weakness to the downside, some type of sudden move, perhaps a breakdown below this low, which is at 107.50. But until then, we really don't want a whole lot to do with Brent. It just doesn't look quite right. With the Libyans producing oil all of a sudden and putting it on market, they do produce a lot of Brent. This will have a lot to do with the Brent price as well. So we'll have to see if this channel gives way. If the channel gives way, it very well could end up at 120, but we think it'll be very choppy, and the path of least resistance is probably to the downside at this point.